But we now know inflation is at a 41-year high.
It's got up to the highest level that we've seen since the 1980s. Have a look at that.
Inflation.
UK inflation.
Inflation.
Inflation. Inflation.
Inflation occurs when there is a general rise in the price of goods and services. Why, though, do some economists see this as a hidden form of tax? Inflation reduces what you can buy with a given amount of money. This is bad for savers and salaried workers because the money they have saved or are paid is worth less. Inflation reduces the actual value of a worker's income. Even with pay rises to counteract this effect, workers may still end up being worse off if income tax thresholds, such as the personal tax-free allowance, are not raised to take into account the decrease in the value of money. In this scenario, workers will pay a higher proportion of their income to the government as tax, despite not actually being any better off, an effect known as bracket creep. On the other hand, inflation is good for those who owe money. Inflation makes the actual value of money fall. A debt is an obligation to pay a certain amount of money, so if the value of money falls, so too the value of debt. Most governments have significant national debts, so this is convenient for them. Finally, if a central bank decides to create more money and uses it to bolster government finances, this will drive inflation and will make citizens worse off. Imagine an economy with two citizens and a government, each with £1. Each citizen owns 1/3 of the economy's wealth, so can buy 1/3 of the goods in the economy. If the government creates and keeps £3 more, there are now £6 in the economy. Citizens can now only buy 1/6 of the goods despite having the same amount of money. This effect is called seigniorage. Bracket creep, the reduction of the value of debt, and seigniorage all increase the wealth of the government while reducing that of the majority of citizens. This is why many economists see inflation as a hidden form of tax. Nouriel Roubini was mentioned at the Bristol Festival of Economics for predicting the 2008 financial crash. He believes that many governments in the future will use an inflation tax to pay off their national debts because other means of raising funds, such as tax rises or spending cuts, would be too politically unpopular. Thanks very much for watching. I hope you've learned something.